Welcome to Capitalize Your Finances, the podcast that's your ultimate guide to mastering personal finances and unlocking the secrets of entrepreneurship. Each week, we dive into the world of personal finance and business development and have fascinating conversations with industry experts, seasoned entrepreneurs, and thought leaders who share their insights, strategies, and stories to help you get ahead in life. Whether you're a seasoned entrepreneur looking to scale your business or someone just starting out on your financial path, this podcast is your go-to resource for inspiration and actionable insights.
Welcome back to Capitalize Your Finances. As always, I'm your host, Christopher A. Poniotu, certified financial planning professional, the Cap and Capitalize. And on today's episode, it could get a little interesting as we're going to go over how to manage your financial portfolio during an election. As you know, one is coming up very, very quickly. But before we get into how to manage your financial portfolio during this election, the free advice of the day, or tip of the week, if you will. And it's short and sweet. The smaller your world, the bigger your problems. Choose your world. That's it. And now that we have that out of the way, it is time to get into a couple things that I think would be most important for you when it comes to managing your portfolio during this election. And not just this election, but elections in general. And some of them are going to sound fairly obvious, and I can almost guarantee you some of these you will have never thought of. So sit back, relax, or not relax, because it could get very dicey and intriguing. So the first thing that we're going to talk about is paying attention to taxes. So whoever wins this election, you could have higher or lower tax consequences based on policies, based on certain procedures. So year-end corrections could be needed. Now, even aside from election years, you see this a lot in November and especially December, where there's a ton of trades, in particular in the stock market. And the reason why is, frankly, a lot of people like to offset gains with losses and vice versa. And there's two types of gains that you need to be aware of. There's short-term capital gains and losses and long-term capital gains and losses. Short-term capital gains are considered ordinary income. Long-term capital gains, which is holding an investment for at least a year or more, is considered capital gains, and that's taxed more favorably. And we've talked about this actually in the past on why, from a policy standpoint, there is a capital gain versus ordinary income. But that's beside the point. Toward the end of the year, all things being equal, if you have a short-term capital gain, you can offset it with short-term losses, long-term gain, long-term losses, but you can't cross-pollinate. Okay, so you can't offset like a short-term gain with a long-term loss. That's not how the game is played. But all things being equal, if whatever candidate wins in the tax bracket is going to be higher, because they've announced that from a policy standpoint, you're going to see a heck of a lot more trading in the November and for sure December, because you're going to see people want to not only offset the tax consequence that I just mentioned, but it's going to be even heightened because, well, if I was on the fence of offsetting a loss or a gain, or I may want to hold an investment for an extended period of time, that kind of goes out the window because you either liquidate today and your taxes are less, or you wait till next year and you're going to be taxed more ineffectively, which is not great, okay? So also one more thing, if you have certain investment sectors per se, and we'll talk about this a little bit more later in the episode, that could be positively or negatively affected from tax policy, that should be something that should be taken very, very seriously. I'm not going to give specific investment advice, but I know one sector that could have a major, major impact is the oil industry. And so from a positive standpoint from the oil industry, if Trump does win, historically, conservative policy has been a lot more favorable towards that. And if Kamala wins, that would be a lot more negative. Just historically, that's how it's been. And there's some weird tax breaks within the oil industry as well, very similar to farming. So just something to think about. Now, the number two thing that you're going to need to look out for when you're managing your portfolio during this election is, and this one's kind of common sense, but you got to really think about it. You got to ask yourself about political risk within your portfolio. So if there's a tremendous amount of political risk in any one of your investments, you probably should look at other opportunities. Now, I want to be crystal clear here. There's a boatload of risks when it comes to, well, really any type of investing, but in particular, the stock market. And by stock market, I mean businesses. There's interest rate risk, there's business risk, there's credit risk, there could be inflation or interest rate, there could be political risk. There's a lot of risks that go into a business. And obviously, you cannot eliminate every single risk from an investment, and political risk is no different. However, if you have the ability to control that, you better do it, okay? Because that's one of the, in my humble opinion, one of the easiest risks that you can mitigate. Now, I want to give an example of an investment I used to have in the past. I have a policy. I don't talk about my current specific investments personally on this podcast, but because it's in the past, I can talk about it. So one of my favorite investments of all time is Wrigley's Chewing Gum. And the reason why I bring that up, and there's a number of reasons why, like it was a very easy business to understand. It's no longer publicly traded. It was a really easy business to understand. It was really cheap to make the gum. Wrigley's basically owned the sports market. They had essentially no debt. They could increase their income and dividend kind of willy-nilly, and their competition was basically zero. And on top of all of that, what was the political risk with Wrigley's Chewing Gum? Now, I'm sure you could get into the weeds, and people that are really nerdy about it could fire back stuff at me with this, but like it's going to be pretty hard to argue. I mean, it's gum. It's not something. It's not tech. It's not oil. It's not green energy. It's gum. It's about as boring as you get. And I'm not saying that you have to go into just a bunch of boring investments, but I will say over time, boring can be brilliant when it comes to investing. And within an election year, that is no different. Now, the third thing I want to bring up is I want you to dig deeper into your investments and dig deeper than ever before, because chances are there is going to be a ton, an absolute boatload of volatility, which is going to result in you finding an immense amount of opportunity. Now, a lot of people will listen and assume, or they'll just cut to the chase going, oh, this is Chris just telling me to keep doing what I'm doing. No, absolutely not. Yes and no. Yes, in the fact that now's probably not the time to try to get cute and creative and change something up about your style of investing or planning. But when it comes to your portfolio, in a way, I do mean keep doing what you're doing, but then, multiply that by tenfold. So let's say that you have a business, and in non-election years or non-election circumstances, there's going to be volatility in the market. It kind of is what it is. But for whatever reason, between now and election day and the end of the year, even after the election is done, mark my words, there will be a tremendous amount of bumpiness in the road. And the reason why I say that is if you know your business that well, but there's a ton of volatility, and on top of that, people are going to act emotionally unintelligent when it comes to investing, that is when you will be able to capitalize, pun extremely intended, on an immense amount of opportunity that's going to be headed your way. And the beautiful thing is you already own the business, so why don't you just buy more of it? Now, the last thing I want to talk about before we go into the commercial break is I want you to get really, and I mean really, selective when it comes to what you choose to read or listen to, because almost all of it out there is either utter nonsense or fear-mongering. And to go one step further with that, if there is any volatility or any negativity towards what is going on within your investments day to day, as long as you read the financial statements and reports, You look at the 13F filings, you see what insiders are doing, which are either executives or major investors, and then listen to the most recent quarterly call or annual call, if it just happens to be the annual call. As long as you do those things and everything backs your understanding of what is going on within the business or businesses that you own, forget the noise because it's all BS. So with that being said, we're going to take a quick commercial break. Then when we come back, we're going to close out with a couple of my favorites on how you need to manage your financial portfolio during this election. Stick around.
Capitalizers, this episode is sponsored by the best-selling book, Capitalize Your Finances, the how-to framework that takes you from compoundingly clueless to monetarily magnificent. Regardless of where you're at in your financial life, whether you're just beginning to express interest and commitment to your personal finances, at the pinnacle of your career, winding down into retirement, or thinking about your legacy for future generations, this book walks you through every step of the way so you can succeed on your terms and with your own values and passions guiding you. After reading this book, you will officially have Christopher A. Panayotu, the Cap in Capitalize, in your back pocket, guiding you in detail through every step of the way so that you can take charge of your finances, not the other way around. Head on over to Amazon.com today and start capitalizing your finances to the fullest with this incredible book, Capitalize Your Finances, the how-to financial framework that takes you from compoundingly clueless to monetarily magnificent. And now, back to the episode.
Welcome back to the show. We're going to get right into this one. And with number 5 that I had on my list of to-dos, if you're going to manage your financial portfolio appropriately during this election cycle, if you are going to talk about your portfolio with anyone, only chat about it with those that have similar investment frameworks to you, as now is not the time to try to get cute and creative and learn something new. Now, this does not mean that you need to just listen to the confirmation bias that you already have on the investments. What I'm saying is surround yourself with like-minded investors, whether they're professional or just like-minded investors, and have profound, like truly profound conversations with your inner circle, in your most educated part of your inner circle. Because at that point, what you can do is you can compare and contrast your analyses with a lot of your most educated peers. And even though they may not agree with you in totality from an investment standpoint, you could almost treat them as your investment counsel or your investment board. And that way you can get that much better of an understanding of what you've got going on. If you go and start asking just random people what you think, first off, most people don't know what the hell's going on. And then second off, you're going to get all of this random data. And now you are no better than the next gambler that just invested in the stock market. And again, we're not gambling. We're not investing. We're owning. And with ownership, you want to own it for a very long time. Now, what does that mean? It means a long time. Okay. Number 6 that I have on my to-do list, ask yourself if there are any investment areas that nobody is talking about. And if you can find a particular investment sector, you name it, dig deep into that sector and investment if you understand it. So probably the most recent time we can think of was during COVID in 2020, in the height of the pandemic. And what was interesting about that, in particular, March through really the end of April and in mid-May, when everything shut down, that was a tremendous opportunity for you to look under the hood and see what opportunities have come to surface. Now, there were like the meme stocks of that time. There was the Peloton, there was the Zoom, there was, what was it? What was another good one? GameStop. There was Carvana. I mean, there was a ton of investments where, people were just getting in because it was chaos. And then you had investments like, AstraZeneca or very, vaccine focused, whatever the case may be. But there were also a number of businesses that had nothing to do with COVID that had immense opportunity. And it's one of those things where is if you can ask yourself, what is nobody talking about? And this is, by the way, this is a very difficult thing to, and I don't even want to say you master it, because some of the best investors we've had on our show have said that is the most challenging thing for them to do is, what am I not thinking about right now? Just that alone, it's going to take a lot of time. But I'll tell you what, and I don't mean to go back to like oil and gas, but like oil and gas is something that not a lot of people like to talk about, right? It's considered hated. And again, I'm not giving investment advice, but like generally speaking, when someone isn't talking about something or it's incredibly hated, chances are it may be a nice little thing to look into. I can actually give you a prime example to this. So a couple of years ago, and again, this investment is past, and so I can talk about it. Activision Blizzard, it's a video game company, World of Warcraft, Call of Duty, Diablo, I think Candy Crush. They have a plethora of great games out there. Okay. And I've played a lot of them because I was a gamer back in the day. And I believe in 2022 or 2023, I'm blanking here, but I believe it was January 2022. There was an article that came out, and what ended up happening was, and it was actually really, really sad and obviously disgusting. Like there was a sexual misconduct case that came out. I think someone even committed suicide. It was really, really brutal. And it was interesting because the stock was absolutely crushed. And I remember too, I was at dinner and people were talking about like how, oh my gosh, I'm never going to play this again. I am totally turned off, et cetera. And my wife was laughing at me subtly. She goes, "Did you just add that company to your like stock watch list?" I was like, "Well, yeah." Because I thought to myself, okay, yes, that was really, really bad. Like that was awful. They brought in a new CEO, probably a smart move. And the CEO said almost verbatim, "Hey, look, I just got here. I had nothing to do with what happened, but I'm going to do everything I can to turn the ship around because before all of that, like the company had a really good track record of just putting out great content and great games." And did the math on that. And later on, I decided to add it. Now, kind of the rest was history. It was acquired by Microsoft. Woohoo, fantastic. People made some money there. But the point was, I looked at something that a lot of people were just despising because it was emotional unintelligence. And, one's emotional unintelligence is another person's opportunity. And so I seized the opportunity. It doesn't always happen that way, but more often than not, you're going to be pretty fortunate. Now, lucky number 7 of this list, ask yourself if it really matters who is in office for your specific investments. And if the answer is no, you are much better off. So this kind of ties into the political risk earlier on that I mentioned. Again, you can't completely eliminate it, but that's a really easy one. And there's really not much more I need to talk about with number 7, but really ask yourself like, okay, if Trump or Kamala actually gets in, does that really affect this business? And again, you can't totally eliminate that with all of your companies. Like it is impossible to eliminate political risk, but the more you can do that, the better off you will be. And you're going to be sleeping a hell of a lot better than your constituents. Now, number 8, and the final tip that I'm going to give you before we close this thing out, you have to remind yourself that if you are growing your net worth over the next 15 plus years, whoever wins the election will have little bearing on your financial success. Now, if you're within 3 to 5 years or have already retired and you are actively nervous about who wins from a financial standpoint, it is not the candidate. It is your lack of actual financial plan in place. So that's either you or a planner, if you decide to use them, should know exactly what is going on and know what mitigates what. And if you don't, You either need to figure it out and you need to figure it out quick, or you need to work with a planner that actually knows what to do. And spoiler, most don't. You know, Nick Murray, and I've mentioned him a couple times. He's one of my favorite financial journalists, authors, definitely well-known within their industry. Simple Wealth, Inevitable Wealth. Say that 10 times fast. It's one of my favorite books. And he brought up the classic 90-10 rule. 90% of your financial success will be your effort that you are putting in as far as consistently investing and growing your net worth. The remaining 10%, you could make an argument for investment selection, but you've got to stick to a process and you cannot waver from that process. Now, I'm not saying you can't alter your situation over time, because money does change as the years go on. But as long as you have a process and you stick to that process, little tweaks here and there is fine. But that alone, the process alone, is what is going to get you there. So I wanted to really just hammer in with that last one because, look, it's an emotionally intense time. Everyone is all over the place. I tried to make this as least personal to my views as humanly possible, and just be prudent with it. If you have any questions about today's episode, or you wanted me to get in the weeds a little bit more, you can shoot me a DM on Instagram or shoot us an email or LinkedIn, whatever floats your boat. And as always, I cannot wait to chat with you next week. Take a deep breath. It is going to be okay from a portfolio standpoint. And as always, keep capitalizing. Take care. As always, thank you for joining me today. If you have questions about today's episode or any personal finance questions, please reach out to me at Cap and Capitalize on Instagram, Chris at capitalizeyourfinances.com, or via our website, capitalizepodcast.com. If you want more Capitalize Your Finances content, head on over to capitalizepodcast.com and check out our blog, free resources, book, and online course. As always, I'm your host, Christopher Panayiotou, Certified Financial Planning Professional, the Cap and Capitalize. And until next time, keep capitalizing.
The information provided should not be considered specific tax, legal, or investment advice and is not specific to any individual's personal circumstances. These materials are provided for general information and educational purposes based upon publicly available information from sources believed to be reliable. The information in these materials may change at any time and without notice. There is no guarantee that any investment strategy will meet its stated objectives. All investments involve risk, including potential loss of principal. You should always seek counsel of the appropriate advisor prior to making any investment decision. All investments are subject to risk, including the loss of principal. The information contained herein does not constitute an offer to sell or a solicitation of an offer to buy securities. Christopher Panayiotou is a registered representative with, and securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. Capitalize Your Finances LLC is a separate entity from LPL Financial. Capitalize Your Finances is not registered as a broker-dealer or investment advisor. CRPS conferred by College for Financial Planning.